Hello and welcome to this week's market wrap from Aquus Property Group. I'm Paul Sonntag. The last week in Australia has seen us still trying to swallow that horrible tasting pill that was the 2014 budget handed down by Tony Abbott and the boys. Their popularity hasn't proved to go too well in response to this. Even today, Tony Abbott's had to cancel an appearance of him and Christopher Pyne at a university due to security scares. So one could say the Australian people aren't too happy with that latest budget. For us property investors, we feel that we have got away from it relatively unscathed. Negative gearing has been left on the table, which is wonderful news. The NRAS program has not been left on the table, but we don't see that to be a huge affecting factor to the residential property market. Speaking of the residential property market, here's how the major capital cities performed over the last week. The latest weekly growth factors for the major capital cities in Australia all came in at the negative. Sydney was the best performer at negative 0.4%, Melbourne at negative 1.5%, and Brisbane, Perth and Adelaide all came in at between negative 0.8% and negative 1%. This index is about as changeable as the Sydney weather pattern, so we wouldn't read into it too much. But the current year-on-year growth average for these major cities tells a very different tale. Sydney has achieved 16.9% in growth over the last 12 months to date, Melbourne at 8.9%, Brisbane at 5.5%, Perth at 6.2% and Adelaide still at a very solid 5.4%. We see that auction craziness still grips Sydney. We've seen two stories in the last week which have certainly made us raise an eyebrow. There's a home in Strathfield in Sydney that went to auction on Saturday, a 3-bedroom property achieving $500,000 above reserve. That is a huge windfall for the owner-occupier couple who were selling the property, and good luck to the new owners. They've picked up a wonderful house. And an unrenovated and uninhabitable studio apartment in Elizabeth Bay has achieved $725,000. That's $165,000 over reserve, and this property needs everything done to it. These numbers are phenomenal. A 62 square metre studio going for $725,000. Please don't tell me that the Sydney market has slowed down. The past week's news has seen NAB come out with a forecast that Queensland house prices will reach their lofty post-GFC highs. The Brisbane Times came out with a buyer beware warning to self-managed super fund investors, and we echo their thoughts. Self-managed super funds are being opened up at record rates, and with that, a lot of people are out to try and get a piece of the action. As a self-managed super fund investor, we do suggest that you speak to professionals and take your time in the investment process. And lastly, The Age in Melbourne came out with a huge story yesterday. Population forecasts are in, and by the year 2050, Melbourne should be home to 7.75 million people. With that comes enormous employment, education, and infrastructure opportunities, so that capital city of Victoria should continue to grow at the very high rates that it is currently experiencing at the moment. And our property of the week is an absolute gem, ladies and gentlemen. It's a dual occupancy property, so you've got a 3-bedroom, 2-bathroom, 2-storey home with lock-up garage, and an adjoining 2-bedroom, 1-bathroom home with lock-up garage, all on one title and all at one price. Purchase price on this fully completed home is $482,000. Expected rental return is $540 to $580 a week, which suggests a very healthy rental yield of 5.8 to 6.3%. The area, which is Bundamba, has experienced wonderful growth rates. Its 10-year average is currently at 5.9%. So along with that and the enormous infrastructure investment going into that area, we see the potential for capital growth to continue for the foreseeable future. And next week, we'll look at what $700,000 buys you around the globe in comparison to that unrenovated and uninhabitable studio that just sold in Elizabeth Bay. And until then, have a great week. I'm Paul Sonntag. That was good, guys. That was good. Yeah. I think it was all right. Bit early for a beer. That's a wrap.